3, 2, 1, 2, 1. Woo! All right. Hey, go.
Hey, happy Wednesday. This is Michelle Plazik from RE/MAX Realty Advantage.
And Kim Malden from RE/MAX Realty Advantage.
Yes, and today we are here to talk about insurances when you're buying a house.
Yes.
Whether people, there's always confusion. Whether you know it or not, there are 4 different types of insurance when you're buying a house.
Mm-hmm.
The most common one that everybody thinks about is homeowners insurance.
Mm-hmm.
But we're actually next week going to have a guest speaker come in and talk about homeowners insurance.
Mr. Gabe Becerra.
Yes, and so we're just going to touch a little bit on that today. But there's other insurances that people don't think about, especially first-time. Yeah, 3 more. Especially first-time home buyers. And they get thrown around and with our jargon. And so we just thought we'd take a few minutes and just explain each one of them independently. Mm-hmm. So the first one is mortgage insurance. Mm-hmm. Kim, you want to explain what mortgage insurance is?
So mortgage insurance is required for loans where the buyer puts less than 20% down, whether it's conventional loan or an FHA loan. If you're putting 20% down or more, you're showing the lender that you're a good risk and they're not going to require that insurance. So mortgage insurance isn't for you. It doesn't protect you in any way. It protects the lender. Mm-hmm. It guarantees that they will be protected if you default. So you're paying insurance that you have no benefit from.
Backed by the federal government.
Yes. Mm-hmm.
So they're the ones that are insuring it.
Yes, mm-hmm. Right. So they're ensuring that if you default, whoever loaned you the money will get their money, mm-hmm. basically. Mm-hmm.
And who pays for that insurance?
So, well, yeah, you do.
You're the buyer.
Right, you do. So with a VA loan, because we just said it happens on FHA and conventional, with a VA loan, though, you have what's called a funding fee. Mm-hmm. So it's paid all up front. Now, what you can do so FHA loans are mortgage insurance protection. Conventional loans are private mortgage insurance. So we have PMI and MIP. So this is that realtor jargon that we toss around and you have to go, wait, what is that? Can you explain that again? But they're both insurance protections. So whether it's MIP or PMI, they're insurance protections. Now, on your FHA loans, I know for sure, and this could be the same on conventional, you might know, if you don't want to pay it monthly, you can prepay it. That can be part of your closing costs. In some cases, I actually have a family now where they're going to save $100 a month by prepaying it, which I think is a great idea.
On the conventional?
Yes.
Yeah. Mm-hmm. And the reason why you probably cannot do it on FHA is because it's there for the life of the loan.
Yes, that's true. Mm-hmm. FHA is there for the life of the loan.
And some of you people who might have that, I think we talked about this one other week, but you might have an FHA mortgage out there mm-hmm. with insurance. If you bought it prior to
June 3rd, 2013,
then as long as you have 20% equity, you can.
And your loan to value is at 90% now.
Oh, 90.
If you bought it before October 4th, 2010, your loan to value has to be 78% or less.
Oh, okay.
So if you have a question about that, call us, call your original lender, call
your title company,
or call your whoever's servicing your loan, mm-hmm. because they're the ones that are going to be able to tell you what your current equity is and loan to value.
Exactly.
Yeah. So, yeah.
Okay, very good. If you have any other questions, if anybody's online right now, and you have a question, go ahead and ask it, and we'll try to answer it. So another kind of insurance.
He can't hear me.
Uh-oh.
Okay. Can you hear me now, Hussein?
Well.
Can you hear me now?
Maybe is your volume
hang
up?
on. Yeah. I don't know. Well, hopefully you can hear me.
Otherwise, maybe we'll share my video.
Yeah, we'll show them ourselves. So technical difficulties, but it's all good.
Okay, so we are now talking about title insurance. So title insurance is basically, so when you're in the middle of buying or selling, the title company is going to do a lot of research for ownership to make sure they're going to go back all the way to the beginning of time.
Yep.
And check the ownership records for that property to make sure that it passed legally. So this is to protect you, the buyer, from somebody knocking on your door one day and saying, hey, you're in my house. What are you doing here? And basically that did almost happen to one of my clients. So thankfully she had title insurance.
Yeah. Thank you, Nina. She can hear us.
Oh, okay. Good. I lost my train of thought.
Sorry. It happened to one of your clients.
Yes, it sure did. Anyway, so the title insurance is going to protect you from someone knocking on your door and trying to claim ownership.
Yeah.
They will go back several years and look at that. And then what they do is after they've looked at it, they're going to ensure that that ownership is correct. Yes. And so they issue that policy. Then the lender also wants a policy to ensure that the mortgage is going to be, that for the amount of the loan will be, they protect against loss for the amount of the loan for that same reason. Mm-hmm. There are a lot of exceptions and exclusions to that policy, so it's in conjunction with whatever the policy states, mm-hmm. but there are exceptions to that. So when you have a title policy, your realtor and your title insurance company is going to go over that with you. It's much too complicated to talk to you in 10 minutes, but just for an example.
There are a lot of questions on that.
Yeah, so that's a little complicated. But anyway, there's two types of insurance policy, title insurance policies in a transaction, and that's the owner's policy, which protects the owner, and then the lender's policy, which protects the lender.
Correct.
So obviously, if you're paying cash, you don't need that lender policy.
Right. Yeah, one of the ways I explain the title policy is, part of it is, let's say the last folks had a pool put in and they didn't finish paying for it. Well, there may be a lien against that house for the pool, but if it hadn't been filed yet or it's not showing up with the title company, and then the title company insures the policy, then the pool company comes back and says, hey, well, now the title company is going to go back and be responsible for that, not you, the new buyer. Mm-hmm. So that's another way to kind of put that in perspective.
Right. A third type of insurance is home warranty. We don't necessarily think of that as insurance right up front, but basically it is.
It is, yeah.
So in the contract in Texas anyway, it's referred to as a residential service contract. Mm-hmm. We throw the verbs around or
home warranty.
Home warranty. Yeah. When it comes right down, it's an insurance policy that's going to cover your property, all the mechanicals in your property, not the property itself, but the mechanicals for a limited amount of time. Right. In our contract, it's typically 1 year.
And their coverage is limited too. So don't think that it's going to cover everything.
Right.
It's not. So it doesn't cover a zombie apocalypse, as the commercial says. But I mean, if your AC dies in August, it's going to take a few days for someone to get out there with your homeowner's policy, your home warranty policy. But they will repair your AC unless they have to replace it. Mm-hmm. They will almost always repair before replace. Mm-hmm. But, if it's a $700 repair, you may have had to sweat for a couple days, but they're going to cover it.
I know that a lot of states do not have this. So we're very fortunate in Texas mm-hmm. to have that. It's a typically $400 to $600 policy, and it covers it for a year. So worth it. Most often,
first year,
our sellers are paying for that. It's pretty standard that the seller pays for that, offers it to the buyer.
Right.
They fill out a seller's disclosure and say, hey, this is what's wrong with my house, and I'm going to warranty that if anything happens, I'm going to pay for this policy. If there's something to go wrong with it, then it'll be covered.
Yeah, because this is what I know is right and wrong with my house.
So basically, when I say it covers the mechanicals, that's your HVAC system, your electrical, your plumbing, and any appliances. So it's not going to cover the roof.
Right. Well, and remember, you have to choose your policy too. Mm-hmm. So you may choose one that's less expensive and only covers, okay, well, that one's done. Sorry. You may choose to cover your dishwasher, your refrigerator, your washer, your dryer, your AC, mm-hmm. but not the electrical and your walls. So you have to read those plans carefully.
Mm-hmm. Yeah, they're very different. All of them are very different. It can be a little overwhelming. Yeah. But there are some things, obviously, that it doesn't cover, like the roof. If a tree falls, then you're going to call your homeowner's insurance.
So talking about homeowner's policy, so we're going to get into that one next week. We're about out of time, and we're really looking forward to having Gabe Becerra with Goosehead on with us next week.
Today is our 20th video. We're celebrating.
Yes, technical difficulties
let's
on
have some
mine.
wine.
So
Wanna have
we're
some wine?
sure. Hey, maybe Kathy Lee and Hoda. I'm Hoda.
Kathy Lee, I don't know. I don't think so. I don't want to be here.
That's why I was quick to pick Hoda.
But anyway, next week we are going to have our guest speaker, our first
Yes.
guest speaker. So we'll see how that goes. We'll interview him, I think. And
Yep.
I don't know how we're going to work that in this small little room, but we'll figure it out.
So
Hey, we'll
have a
see
great
you.
week.
Thanks. Bye.